Hello traders and welcome to another video review. Today is Wednesday, July 22nd, 2026. Let's take a look at the economic calendar for today. So the economic calendar has two high important data releases. One is the CPI data from the UK, scheduled for release at 8 o'clock, and the second one is crude oil inventories from the USA, scheduled for release at 4:30. And that's about the calendar for today with high economic impact data releases. So without any further ado, let's switch to the charts and we start with euro dollar. For our time frame chart of the euro dollar is still trading below our orange trend line, which is indicating a little bit of the weakness in the background. Right now we are testing as well the lower channel line, roughly around the level of 1.14. Local low was made already, 1.1397. Then we have the little bit of the bounce, but the momentum is still negative. Momentum is still below the level of 50. Look at this. This is the level of 50. Roughly, this is the level of 50. So we are way below the level of 50. Now it's 42 points. So any extension to the downside below 1.1397 extends the drop out of the channel, still below the orange trend line, down towards 1.1379 and 1.1363. So bearish pressure still is still visible on the euro dollar. Great yellow channel still indicates that in the background we have a weakness and the downtrend. British pound broke out of the channel. This ascending channel has been violated at the level of 1.3408. Even the technical support was violated as well. A local low 1.3358 with this very negative momentum, 37 points. So definitely the market is under the bearish pressure. We need to change the color of our levels from green to red, because now they will act as the technical resistance. So those levels are now changed the color to the red. There you go. So what will happen now? I think we should add the trend line, just as we have this trend line on the euro dollar. As you can see, the market respects this trend line very well. Look at this. Let me just change the color to obvious one, the orange, and make it a little bit thicker so we can see it clearly. Now we zoom in. Look at this. Look at this. Definitely technical market respecting the trend line. So as long as we trade below the trend line, the outlook remains bearish. Next target, technical support at 1.33 and 1.3273. US dollar versus the Japanese yen. Big breakout to the upside. Finally, the breakout towards the extremely overbought conditions for our time frame chart of the RSI. And the local high 162.25. Now we are testing the support. So okay, let's change this color for our levels to green for the support, right? So 162.72 is now technical support, and 162.87 is that technical support as well. So we should see further movement to the upside as well. So first breakout was from the triangle on the RSI, nice breakout, and then the momentum of obviously it's been consolidating a little bit here below the trend line and then burst to the upside. So in the background, obviously there is an uptrend. So US dollar versus the Japanese yen continues to move higher. How about gold? Gold breaks to the upside. Finally, we have a breakout. Let me just adjust the lows for the wave Y. So this is the extreme low for this situation, 3,943. So that's the potential low for the wave Y. A little bit of the movement to the upside, correction to the downside, correction, and now another movement to the upside. Local high for now 4,141. Nevertheless, it doesn't mean much because we hit the extremely overbought conditions already, but we didn't hit technical resistance. 4,201, 4,221. So this zone here, this technical resistance here, both of them must be clearly violated in order for the gold to rally higher. Otherwise, still inside of the range. S&P 500 is trying to move higher, right? Is building this triangle. Possibly, if you connect this high and this high, you might have some kind of a triangle. Nevertheless, right now, the key level here is still the technical support. This technical support has been tested many times on this chart, as you can see, and this technical support will act as the technical support as long as it's not violated. It's obvious, all right? So please keep an eye on this little bit of the zone here. I don't want to add any kind of a visual effects here. You know about this because we've been talking about it at least for 1 month already. These levels here, 7,400 and let's say 7,400, and the lows of this one dip is 7,426. Okay, as long as we trade above this level, outlook remains sideways to bullish if we break, and then if we break below the local trend line, the orange one, the outlook remains more to bearish outlook in the short term, targeting the levels roughly around 7,280. So that's the S&P 500. How about the crude oil? And the oil keeps rallying higher. No mercy for the traders. Local high right now 87.85, 30, almost 31% from the lows. Obviously, this situation is made because of the development of the situation is because of the geopolitical tensions, right? So we don't have the peace and ceased fire between, of course, the USA and Iran, which is why we got the situation when the US oil, the crude oil, is dramatically rising over 30% since the low, which was established apparently in July 2nd. So that's only 20 days. 30% in 20 days. Strong momentum. Of course, we can see the bearish divergence here. It's obvious. Nevertheless, this is the technical indication, right? The bearish divergence. Macroeconomical situation is way more important than this technical chart. So I'm just saying, right? And we've seen in the future, we've seen in the past, obviously, that if there is a ceasefire or any kind of a peace, the price of the oil can go down very, very quickly. If there is other situation, the price of the oil can go up very, very quickly. So it's definitely, the current situation is dictated because of the development on the Middle East. Bitcoin moves towards 66,961, almost hits the technical resistance at 67,325, hits the extremely overbought conditions, prints very important doji. Look at this pin bar in form of the doji candlestick pattern on 4-hour time frame chart. A little bit of the first confirmation, little bit of the bounce, but then extension to the downside is coming right now. The level of 65,639 will act as the technical support, and we might see some sort of the support here, and especially because the momentum came down quite much. But it doesn't, this movement from the lows of 57,000 doesn't actually looks like this is an impulsive wave progression to the upside, okay? So to be honest with you guys, it's nice movement to the upside, nice pullback, but it doesn't mean much right now. It's too much of the sideways market, too much of the overlapping situation here. Mini cycles, lower time frame cycles are overlapping. That doesn't look like the impulsive. This looks impulsive. This looks impulsive, okay? This doesn't. Which means, basically, for those of you who don't know, according to the Elliott wave theory, this is not the beginning. The chances that this is the beginning of the new cycle are low because it's not formed as the impulsive cycle should be formed, right? So that's it. So it's more like the temporary bounce, temporary pullback, until the downside movement is continued, right? So that's the situation on the Bitcoin. we should see, in order to see the impulsive movement, first we should see above this high, then this one, and then move obviously higher, but in impulsive fashion, like this is impulsive, right? This, just compare it. This one, of course, this is downside. Impulsive cycle, this is upward. I think it's corrective, complex corrective cycle to the upside. So it's not impulsive. It doesn't look as impulsive as it should, according to the Elliott wave theory. Okay, that's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye-bye.